Two, CTM. What's going on, everyone? I am so glad to be back with you all. 3-day weekend, long weekend coming back from the mountains. Summer sessions is officially over. It's time to get back into it. We got a lot going on this week, of course. Right now, we got a lot of European leaders and Zelensky over at the White House. We got Powell and the central banksters headed to Jackson Hole, Wyoming. Big shout out to the Grand Tetons, all of those who have visited the Mangy Moose and had some moose drool. You guys know what it's like coming back though from a 3-day break. Though it takes a bit to get back into the flow. Nevertheless, I got caught up after our session on Thursday, and I just spent a lot of time looking at the charts, and I'm gonna go over what I'm seeing with you. That's what we're doing today. And is it gonna be a banger? Blew my mind. I hope it blows yours, and I hope together we're able to kind of just figure it out. That's what we're looking to do. I don't know. Like, do we expect a peace deal today? Seems like, I don't know. Zelensky says he does not want to give up any territory. I don't know what's going to happen. I feel like, regarding that whole situation, I just feel like if there's not a peace arrangement made at that point in time, likely I expect the U.S. will kind of wash their hands of the situation, and it will be up to Europe to figure it out. So I don't know, but we have to hope for peace. We have to pray for peace. A lot of people have different opinions. I don't. I mean, we'll see what happens. Will that affect markets? If there's a peace arrangement made, I think that will be perceived to be very, very bullish reaction off of the markets. So will that happen today? I'm not sure. I don't know what they all have planned over there. It just reminds me of this chart over here. I'm just trying to get to it. We were talking about something. Well, reverse repo almost drained over here, and we were just kind of watching and to see what would happen as the Treasury is just offering up all these new issuances to raise money for the TGA to fund the government. They seem to have backed off here this week. I guess there's a lot going on. It's summer dry. Nevertheless, we continue to see 10-year kind and yields kind of selling off slightly with all this pressure. Reverse repo is drained. There are some that thinks that this means an immediate return to QE. I don't think that. And if you go back over here, one of the last times it was drained back in 2018, it took roughly about 18 months or so in order for there to be a problem. And that problem was the overnight LIBOR rate spiking, and then the Fed needing to stop QT. And then they actually began running their balance sheet up. They said it's organic balance sheet expansion. They said it's not QE. If that were to happen now and the Fed begins raising their balance sheet, I don't care what you call. I mean, is it QE? Is it not QE? I mean, either way, it's probably pretty bullish for liquidity and risk. It's not outright QE, but nevertheless, it certainly is a form of QE. I'm missing one thing. If you guys want to just give me 1 second before we get started here today, I just want to make sure that we're good to go. And there are some that believe that right now we're at peak liquidity. And hold on 1 second. Let me finish. There are some that think that right now we're at peak liquidity. We're about to see some type of reckoning, and we're about to see right before that. It's not funny. It's true. A lot of people that expect a crash, they always expect that melt up first. Is either one of those things going to happen? I don't know. We were just trying to look at it earlier today, and I was asking the question where I'm personally struggling right now, and that is, I'm failing to see where the approximate 150, $400 billion of inflows are going to come from in the next in the next 3 months in order to spark a Bitcoin blow off top. A lot of people we're getting close to that window between September and October. A lot of people looking for the mega blow off top to occur. There's some signs of some frothiness, I could say. Ethereum making that massive move up into the all-time high, just pulling back a little bit over it. Still look very healthy above the yellow line. Bitcoin looks very healthy as well, also above its breakout so far. Now, if you're looking at the weekly chart and you're seeing that, oh, we spiked above, and that's a pretty bearish candle there, and that's a pretty bearish candle there, and seasonalities are not so favorable in this moment. Seasonalities, we know, are favoring some type of just chop throughout the rest of August. Maybe after Friday, maybe after Jackson Hole, spark a little rally, and then that's probably faded into September. And you could see that we just continue to watch into, the end of September. And I would not be surprised if we're about where we are and or lower by the end of September. That's the expectations. And we'll see if that happens. By the way, IBIT closing out for a small, less than 1% loss here this morning. Tesla enter long pending. And then we continue. We'll get into positions later. I don't want to get into positions right now. I wanted to get into our flow. So I'm having a little bit of just trouble rationalizing where we could see on the low end 150 billion. And some people might say, well, I could see that happening. I could see on the low end 150, but I don't think you're accounting for sellers if you're doing that. You could make it's net flows. There has to be more inflows than outflows coming into the market, and they need to be substantial over the next few months in order to see price, rise 80% or what have you. And, could it happen? Could there be some type of adoption event or catalyst? It's not looking likely. I mean, if we're going to have the Bitcoin Act, I think right now Polymarkets puts 20% chance it happens in 2020. It has to be, I think, after the midterms. I think that if the Republicans are able to dominate and gain control over both the House and the Senate, at that point, that becomes like a much more probable outcome of something like that happening. Yeah, but we'll wait and we'll watch, and we're going to try to give ourselves a little bit more awareness coming out of today's session. So where are we at right now? Let's take a look. We're on the weekly chart. Obviously, we're still above the breakout of the yellow line. That's still holding. That looks pretty good over here. I'm going to jump down a little bit lower, and I know that I have this like this would be a sell impulse breaking below here. That would be a pretty legit correction, no? Hold on, let's go over here. From the high into the sell impulse, that's a 22% correction. Y'all know that corrections have been pretty tame, pretty mild. Even in April, where we had massive uncertainty as the tariffs were all launched and trade deals around the world being renegotiated, markets, NASDAQ coming off 30%, Bitcoin came off 30%. Is there anything that anyone could perceive that's going to cause, during unfavorable seasonalities in the next month, us to come off 30%, maybe back down towards 86,000 into that nice pocket? You could see that nice bit of support over there. I mean, it could happen. I think it would be unusual. That's all. I think it would be unusual. Looks good so far. I'm trying to eye up we're in an uptrend. We're in a bull market. We're in an uptrend, and we're consolidating the last breakout. And by the way, the last breakout is really from here, right? This is the last breakout. That's a big move. But this was a secondary breakout. We want to hold that. We made a leg up. We want to hold that. We want to continue making higher lows for it to be a continued healthy market. If we start breaking down, obviously, keep it simple. A lot of people looking like I'm trying to, I can't see it, so I can't do it. Like, that's obviously not right, right? That's why I said I can't do it. So it's the first attempt. Is that like I said, we're in a bull market, and so far, is that a sell impulse? I mean, if you're trying to go counter, like we're in a bull market, we just made a major leg up. We're making a secondary leg up over here, and you're trying to fade a bull in a bull market, is that an opportunity? For sure. You know, obviously you can hear my voice, the hesitancy, but where you wrong, that's the first thing that you want to watch out for and look for it. I wouldn't do it. And you know, I'm not obviously. I'm trying to see what would be a different type of. I'm trying to cover like give everyone just the TA they need. I mean, I don't like this at all. Maybe breaking down below. Let's get an exact number over here, right? Breaking below 109, that becomes a little more concerning that we could have a bigger pullback into the pocket, and that pocket is only 22% from the all-time high. That would just be, you know, normal. So I guess that's the best discretionary view that I could give. I see people out there looking to go ahead and sell over here this morning, calling out sell impulses. And I think you're in a bull market. I think you're in a major uptrend. And right now you look to be consolidating a secondary confirmation. The weekly is concerning. There's no doubt about it. And you could see that we took out the high. We closed with an ugly candle. But yeah, that's pretty clear. So 10-year continues its coil, right? Doing pretty good right now, actually, in so much as that all the offerings coming out from the Treasury, yields just continue their coil right now. A lot of people also see yields collapsing over here. Anyway, let's keep going. CTM. I'm so happy to be here with you all. It's going to take me a minute to find the flow. You know that. I come back from the 3-day. I just wanted to get our awareness first out of the way. And then let's get our positioning out of the way so that we can get into the heart of today's session. And I am seeing something massively different. And I want to go ahead and use you all as, you know, as a collective hive mind over here to go ahead and make sure that we have our bearings correct and are ready to go ahead and pivot. And it might not be pivot in the way that you expect. It might be pivoting in a different direction. Well, it is going to be likely pivoting in a different direction. That's what I'm trying to set up for you right now. So let's go ahead and take a look. But I can't get, until we get a few more likes, I just can't get into it. So I'm just going to, you know, take a break. We got over here Ethereum still holding over here. A lot of people talk about the record shorts on Ethereum futures, and I'm not sure what's happening on. I mean, I'm sure what's happening over there. People are doing a arbitrage play where they're going long spot. They're short the futures. I think you capture. I don't know. I don't know what you capture. I don't know if it's 10% a year or it could be even more than that. I don't know how they ultimately close those trades or when they try to close it, if it's like a question of who's out first, who makes it to the door first, because as people begin covering, price is going to rise. But I don't think those shorts are being hurt right now. Now, that reminds me a little bit of what happened with the arbitrage play of GBTC and Bitcoin. And people thought that like they had discovered a glitch for free money until the NAV crushed them and therefore the market itself. But yeah, I'm not so sure. I'm not so worried about the record short position. I don't think right now that is like those shorts are feeling the pressure and are getting their faces ripped off. I think that they're completely hedged with the spot. So Ethereum still holding open position, Cardano still holding open position, both heavily in the red today. Bitcoin bull runs remains in the market, and we're just coasting right now. We're just coasting. Maybe markets are waiting on to see what happens over at the White House. Not really sure. Let me go ahead and just get going over here so we could get into the heart of today's session. All right. Boom. CTM. So when we got off on our call on Thursday, I was looking at some charts, and you all know this has kind of been more along the lines of my default view of what we're looking at, right? And I like you guys know that I'm very into the structure, and I point out things like the March and April top, the October November top, the December and January bottom and the structure throughout. And, this goes back roughly, I don't know, 12 years, 14 years. And then even into the earlier hype phase of Bitcoin, but it's a little more gnarly back then. And this, when you're looking at this chart over here, you're looking at this over here, and this is the structure that I'm focused in on. And I'm wondering or questioning if that's correct or if it's wrong. And I'm not here to walk away with a conclusion with you all. I'm here to ask questions, to look at this objectively and try to figure it out, because there are pretty strong ramifications for depending on whether or not we actually have this right or not. So here's what we look at, and I'm going to say this is the default view we're looking at, and I say things like, you know what, like the orange line down over here, and that's even a little lower. I was a little generous over here. I went to the peak of the COVID crash over here. We didn't, even on the collapse of FTX, we didn't exactly touch that line. I don't know that you would. Anyway, that it's a little generous. And I say things like, okay, between now and I can't see that. Hold on. Between now and the summer of 2027, the next 2 years, there is the potential possibility that you will have the probability of accumulating Bitcoin under $118,000. But after that, I don't think you're going to have that opportunity going forward. That seems reasonable. That seems balanced. That seems like a good guide. And of course, the higher you get away and over here, for example, at the peak of December 2017, I could have went far to the right to the mouse, and I could have said, hey, listen, I think between now and the summer of 2023, you have an extremely high probability of accumulating Bitcoin under $19,000. But after that, I don't think you're going to have that chance again. And that seems good and balanced. And then, or you could use the 14,000, or there's a close here at 11,000, 12,000 in July of 2019. And I could have said something like, listen, I think between now and the summer of 2022, you have potentially the opportunity to accumulate Bitcoin under this price, but after that, no more. And then last one, because this works very well. Over here, you have 65,000 in October, right? 2021. And we could say, or I could say, listen, the possibility exists to accumulate. We're very high in the deviation at this point. So it's a strong possibility and potential you're going to have the probability of accumulating Bitcoin under that price, but only up until 2026. After that, you likely are not going to have the opportunity. So March 2026. After that, the opportunity to accumulate Bitcoin under that price likely doesn't exist, doesn't happen. Now, there are a lot of people, we will maybe touch a tiny bit on 4-year cycle behavior in this session, in so much as that there are people who think that, hold on a second, we're all over the place today. There are people who think that we're going to see something like the markets maybe go to $210,000, and then from 210,000 correct down, well, 75% to 52. If that were to happen, then what I'm telling you is false, right? Then like you're gonna have past March of 2026 the opportunity to accumulate Bitcoin under $55,000. Bitcoin is cheap. I don't think that's happening. I'm just trying to give the other view of what people do believe is potentially getting ready to happen, and it is potentially getting ready to happen. So it makes sense to view and discuss. So from where we are right now, if we go higher, if we go to $210,000, and it happens whenever, like at that point, I could say that, you know what, you likely have through 2029, January 2029, and a pretty strong probability to accumulate under that price, because we'll have gone up higher in the deviations. The higher we up, the higher we are, the more the probability you're going to have the potential possibility to accumulate Bitcoin under that. The lower you are, the less time and the lower the probability you'll have to accumulate Bitcoin at that price. It puts a new perspective into 55,000 Bitcoin is cheap. I like that a lot. So this is the view that I've been, or the assumptions I've been going under. And then I look over here, and you guys are familiar with this chart, very familiar with this chart, because we've been looking at this chart for, you know, since before we made it above the 0.786 retracement fib for a couple of years now, I think. Hold on. Yeah, I mean, a couple of years now. So I'm just moving on from this chart today. So I want you to see this chart, to view this chart, because it's going to be incorporated. And then y'all give me some liberty here. Like I said, I was just spending a lot of time, and I think I'm so far doing a good job presenting this. I'm going to continue to do so. We come back to this later on. We're going to ultimately come over to that. So this chart here that you're looking at is now two things. So I'm going to remove the orange one. The orange one is this chart right here. That's that orange line that you're seeing that I just removed. And then the sustainable channel over here from this chart, the sustainable channel, I'm now extending all the way down over here, which is pretty neat. So we talk about, or I talk about, if we break to the upside, then we're looking for that elevated price action likely to ensue. I mean, right now we're trading exactly in the mean of the sustainable channel. I don't see any reason to think that this cycle is coming to an end, either through elevated price action that reverts to the mean. We will get a bigger and larger drawdown. We talked about on Thursday, I think, how that drawdown could easily be, if we get an elevated blow off, 50, 60%. If that's happening, that's not happening yet. We've just remained very well in the sustainable channel. And what's different about this green line that I'm introducing here is very different. It comes off of the top of the hype phase, right? So this is resistance of the hype phase. And then since March of 2013, for the last 12 years, we've never traded below it, which is different than the orange line, because the orange line, we spent from 2015, the late December 2014, and for 2 years we traded below it. We haven't traded below it since, but the hesitancy, is that right? As far as what we're looking at over here, stay with me. This is really important. So the green line, we've never traded below it ever since entering into the facing reality stage. So I have this green line over here and this green line over here, and the ramifications. Yes. What I see it. Well, this is great. I just love all the input. So the ramifications for what I'm presenting over here is so much as that we talked about in the very beginning, that, for example, you have between now and the summer of 2027 the potential to accumulate Bitcoin under $110,000. Now, we're not on the low end of the deviation, but we're not even like in the medium or extended. So I don't think that there's a significant probability, but there's there's a good probability, and I don't think it's a strong probability. There's a probability you'd be able to accumulate Bitcoin between now and the summer of 2027 under 108. But I'm suggesting after then you won't have that opportunity. 55,000 Bitcoin is cheap. This line gives a different vantage point, and this is why this is important for us to look at. And I'm not trying to create FOMO whatsoever. Could we top out at, Robert, $150,000 and then enter the bear market? Yes. What does that bear market look like? Does that bear market do we break the green line here, the sustainable channel, the bottom of it? Do we break that green line, which it could easily happen? It has not happened since March of 2013. And it doesn't mean that it can happen. It could easily happen. Or does that $150,000 target, like that estimate that you're just talking about, let's say it happens in, into January 2026, 150,000, is the bear market just a 30% correction back to the green line? I mean, so if that was all happening, then we've never left the sustainable channel. We're still in the same bull market, and I think we're all on the same page, right? But if we break the green line, that would be something different. That could happen, right? And there's a little bit of a tension of what I offered as far as this view. And then when you look at the green line, which is a higher ascent, right? So, for example, I said thank you guys for being forgiven today as we come back into, let's say, $110,000 into the summer of 2027. So let me go to June 2027 here, and we'll see the difference. So we have June of 2000. This can't be right, is what I'm like. This can't be right, right? This suggests if this green line does not break, and like, guys, I just want you to see a couple of things here. I'm gonna go slow. I don't care about like going fast and present. I just want you to get the substance of what I'm offering here because I think it's big. Right now, price remains in the sustainable channel. That's happened since the bottom, right? I show you that sustainable channel actually just extends all the way back over here, and price has never left this. Like, anytime price has left the sustainable channel, it's led to an elevated price move, no doubt, but price has never traded below it. And if we don't trade below it going forward, it's not to say that it won't happen, but if it doesn't happen, 110,000 Bitcoin, that suggests that by roughly May or June of 2026, of June of next year, that the opportunity won't be there to buy Bitcoin under $110,000. Now, I could envision a world where that happens, but through many different factors. It's hard for me to envision a world where we see 150 to $400 billion in the next 3 months of inflows, net inflows into Bitcoin, causing a blow off top. That could happen. That's hard for me to reconcile. I could envision a world where the sustainable bull continues, and looking into June 2026, as per my analysis has been, right? Like Bitcoin is going to be higher. I don't think a lot of people expect that. So maybe that's wrong. Right now I'm just hitting on the ramification. The ramification. No, Andy, I have no idea. Like, I want to address that. I think it's very important. If you come back until this past cycle, you had a lot of you have a lot of people talking about this was going to be a left translated cycle. And at the time, I said, no, that's my opinion. For whatever it's worth to you, is that the cycle high is going to be a lot closer to the 2028 halving than the 2024. And that has not happened yet. We're almost in the middle. Well, the middle is far away. The middle is not until next March, right? So the middle, we're not even there yet. Definitely not left translated, but it could be a lot of normal Fourier cycle behavior. Actually, there's a small window left. That window is over the next 90 days to have Fourier cycle behavior. I'm like, give it a couple of more months. Wait until January. I think by then, at that point, what you're going to see is a lot of people saying, oh, no, it's going to be in the first quarter 2026. After that, you can't keep moving the pieces, the goalposts, right? After that, it's over. There's no, the Fourier cycle has been broken in so many different ways, but that has not happened yet. And Fourier cycle could still trigger as in the past. I just, again, I have trouble reconciling where that money is going to come from in the next 3 months to cause that type of behavior. We're watching for it because if it happens, if we break out of the sustainable channel to the upside, what that means is that obviously we're looking for that elevated price, and then we're looking for a snapback, a sharper reversion to the mean. Now, that doesn't mean if that happens, or I ask you, if that happens, if price hits 210, it's just breaking outside of the sustainable channel. Do you think we have a pullback back towards the bottom area of the sustainable channel, or do you think we break it? This would be different. All I could say is for the last 12 years, price has not broken this. It could happen. Let's take a look at it a lot further. This is just the warm up. Right. Thank you. Before I had that in the beginning here. Hold on one second. I gotta get back. There's a lot of moving pieces here. There we go. So now you might say, Dogination, that well, the ramifications are not that much different. But yes, they are, in so much as that I talked about, into 110. So sorry, we're at 115 right now. So here's the difference. Until February of 2000 and January of 2027, the orange line suggests that you have the potential to buy Bitcoin under $110,000. The green line, however, suggests that that's a lot sooner. It's about 10, 11 months sooner. And then after, after May of or June, we said, of 2026, you will no longer have that opportunity. That's the ramification. When people talk about right now that Bitcoin is going to correct, or I hope so. I honestly hope so. All of us as Bitcoiners want the opportunity to accumulate more Bitcoin at lower prices. Now, we don't want Bitcoin to trade back to $17,000, because at that point the institutional money might be like, I'm not interested, right? Obviously, we want the Bitcoin to continue to be the best performing asset as it's been. I have to assume with you, as you make that assumption, that the green line, the ramification here is enormous if you think about it, especially if you have a lot of people, because of four-year cycle past behavior. And I point out over here, I said, could someone make the case that people are just not drawing parallels to past cycles at a completely different stage of adoption? And you all know how I talk about where we are in the adoption. This is a beautiful chart. That's why I'm just taking a second to smile at it. It's such a beautiful chart. It really is. So at this moment, let me say, I don't know what happens, and I don't know which is correct, but I certainly am trying to figure it out. And I have to go with the same assumption as Dogination. Even though I thought that the orange line here was a really good guide of expectations, the green line, until it's broken, I have to go under the assumption that it's going to be correct. So let's continue the conversation over here. So now we got both lines over there. And guys, I know you love it as much as me. How cool that the sustainable channel extends all the way back. I don't even know what that is. Extends all the way back over here. Let me come back to this chart. I was like, I don't even know what that is. So maybe it's just a copy of it, but if I do it for some reasons, I don't know why, but I'll come back. Let's keep going because I got more to talk about. I started looking at, first of all, I started looking at this. So here we go. Asking myself, well, what's the 10-year CAGR of Bitcoin? And the 10-year, let me just go ahead and get rid of these so you guys can see it all easily, is somewhere around, I don't know, like 83%. Well, I'm sorry, I shouldn't say I don't know. It's somewhere around, let's call it 82%. And then when you look at the 4 and 5 year CAGR, 5 year CAGR is 57, 65, 64, around those areas. All right. Yeah, prices on a log scale. So those two numbers are important, right? Because, and I'm going to tell you why right now. These two numbers are important that I'm giving you out. The CAGR of Bitcoin 10-year and 5 year. And the reason being is because you remember I used to do this. I wish I had it on the chart. I don't, whatever. So the CAGR of, let's go to January 2021. The CAGR of the orange line is going to be, there's January, is going to be close to 62%. Hold on one second. That's not neat. And I need a second to get it right. Close to 62%, which is what I've said, right? Like we've done the whole thing, 62%. But the CAGR, or the CAGR, this is not the CAGR, the yearly return of the average of the orange line is 62. And of the green, though, rough estimates here, guys. Obviously, I'm just doing my best. But the green is, let's call it 76, 77. So the green line is actually pretty close to what the 10-year CAGR is of Bitcoin. I keep trying to disprove this, right? I don't really necessarily want that green line to be true and or hold. 5 year CAGR lines up with the orange. I find that fascinating. I don't know if you all do or not. I tried looking for what the like people's estimations of the low is, right? Because right now, as far as where we are, I have two lows in play. And the green line low of where we are right now is like $73,000. And I'll say and I say to you, well, that might actually be pretty accurate in so much as that we just went through a massive correction in April, and there it is right there. Like, do you think Bitcoin is going lower than the April low anytime soon? And probably not, right? And then the low below that though is all the way down at somewhere around 58,000 Bitcoin, just above 55,000 Bitcoin is cheap. So that $55,000 Bitcoin, you know, it it's higher than these estimates give for, I guess this is, I don't know what this is, Bitcoin Magazine Pro, like the power law low. I'll come back to that in a minute. And the reason I'll come back to that in a minute because, well, I'll come back to that in 1 minute. Just bear with me here. And I hope you're enjoying this. I know I am. This is a beautiful chart. This is the green line. We don't need our 0.786 retracements anymore. It just at this point brings noise to the thing. So I'm going to be removing them going forward, right? Just so you all know. I'm just trying to keep it going here with y'all. So we'll come back to the power law laws in a moment. I'm looking at this chart over here. This is our lines, our structural lines, like over here. So I'm trying to find out what it could the low be. And with these, this is the orange structural lines over here. And, they line up. It's the structure. You could see it so well. And here you have the global lockdown lows. I don't think that we're taking that structure out. We didn't during the FTX collapse. I think that holds. That's coming in around $50,000 a Bitcoin, which actually is pretty close to this one. Well, this one's a little off. I'm going to say this is lower than that. We're not taking that out. I don't think that, I think that's a really good measurement over here. So my eyes, I have to take this off. right now because we don't need those anymore. I just told you that. It's just too much noise to the chart. So I have this chart and I'm adding in those lines that I just showed you over here. And then I have this chart over here, which is just showing you the progression of what I was doing. So these are the lines. And now I'm making the lines. I got to get rid of these. Just from same lines from the December 2018 high into this area. So we have, y'all with me? From where we are today, or on the all-time high over here of Bitcoin into the bottom of that line, 73% drawdown, 75% drawdown. I have to think that that's like at any point in time in a bear market, we've had obviously two 85, 84% drawdowns and then a 76. And I believe that we're going to see diminished volatility going forward. That's my hypothesis. I mean, is it wrong to think that at any point in time you could have a 75% drawdown from the all-time high? I don't think that's wrong. I think that that's prudent. You never know what's going to happen. And like, if someone were, I see a lot of people looking to borrow against Bitcoin in the future. I think that you have to have this little bit of aid of expectation of what your worst case scenario is. So like, let's say that Bitcoin pulls back 30% to just below $88,000. Like, we've seen multiple or two 30% drawdowns in Bitcoin. If we have another 30% drawdown, I don't think that's the floor. I think that could happen at any point in time easily and that you could go further. But let's say someone waited to a 30% drawdown to borrow against their Bitcoin. Okay, that seems a little bit smarter. But then, they have, I know I'm changing topics here, but I'm going back. I'm just trying to get everything out to you always. But then you could have, right? It's like a 50% loan to value you need to maintain. So, at the price trades below 43,000, you're getting close to a margin call. You already have a margin call. And price could go, I mean, expectations should be something like price could correct all the way down 75% at least, right? So anyway, this is just like a little bit of an aid for that conversation, which we're not having right now, but that's why this chart is here. And that's to give like, yes, I don't think that we're going to break the orange line. I look at the green line and I say, well, that like Dog Nation, I have to assume that doesn't break until it breaks. And it has not broken in 12 years. And when you look at the line, and you see the sustainable channel. I'm trying to make this just nice. You're literally saying that you expect something different to happen, and that's okay. Something different could happen. Let's look at what that different could be. Yeah, because that's what I'm trying to do. I'm trying to know always where I'm wrong, and all I care about is the truth. So I added this one over here. Right? So we have our lines which coincide very well with the very bottom of whatever this power law is. Here, how about this? If price breaks out of the sustainable channel over here in the next few months into October, right? And it breaks towards that top zone 210,000, could go higher, right? Anything above 210,000. It broke out of the sustainable channel. At that time, I'm looking for this thing, obviously, to first accelerate, and then I would be watching, and I would be looking for sure at sell impulses, looking for and suggesting when a technical breakdown, de-risk is occurring. There's no question about that. And then I would be looking where we could possibly looking to get a good time to really buy into Bitcoin if all that's happening. Now, if the green line doesn't break, right, and then you come up until, I wish I had the chart here. I think I did. Just give me 1 second to pause and bring it up. There we go. As per, you know, my expectations, and I put this like this zone over here. So let's say we're in the middle of it. And let's say we're at $170,000 next summer, a year from now. Which again, that would have that's just my projection. And then you all know I gave my second one over here of where I think we're going to be. But we're focused on this one right now. Let's pretend that is accurate and that's working out. And next summer, in August of 2026, we're trading at $170,000. We're still within the sustainable channel. We're still above the green line, but at that point, we're saying we're running out of room between when the green line is going to rise up. At that point, people will realize something is actually different about the 4-year cycle because of the rate of adoption and what's changing. And at that point, this whole like log regression is going to become obsolete because people are going to realize that diminishing returns in the early majority are not a thing, and it's actually an exponential growth. That lines up, what I'm expressing here lines up with this. So I got to pull up one more. I don't even, I guess that's supposed to be an orange line over here. Hold on 1 second, y'all. That's so beautiful. I don't have the most important chart. Hold on, I'm missing the most important chart. I don't have it. So this is the most important chart. Right? What I'm describing to you, and under this situation, the green line holds, right? But it doesn't. And see this, you see over here? I hope I didn't lose you all. This would be a break of the green line and into the orange line. I don't know why it's not up here. I mean, it is up here. I just have a gazillion tabs, and this was work that I was doing on Thursday for you all to present with you. So let me just take one more brief look and see if I could find it. Oh, that's so weird. That's so strange. I want my chart. I don't know where it is, but I'll have to find it for tomorrow. But anyway, that's a great place for us to kind of end today's conversation, getting back into the game over here. And I think it need, like, I can't just show these charts. Everything needs to be explained as I explained to all of you today in order to be able to follow the thinking about what's happening. And I think that it continues to really present a really accurate picture about what is happening, the changing nature of what's happening over here, potentially, right? I wish we had that chart. You know, when I say that chart, I'm talking about this one. So I'll have to spend a great deal of time trying to get that chart back up. And then we'll continue the conversation tomorrow from where we're leaving it off right over here. And is this it? No, but I wanted to talk to you about the power law law. This is the floors in the power law, the power law support price, and it's this orange line over here, and it's broken multiple times already. So I don't really think it's accurate. I think that the way we're going about it is a little bit more accurate. The chart with the green line. Well, not that green line. No, it's not this green line either. And this green line here is supposed to be orange, but That's illustrated perfectly here. I don't need to change that. I could just delete that one. So I'll delete that one, and then I have it. I know I did it. Oh, I think I did it. Maybe I didn't, but yes, I did do it. These two lines on this chart is just the next view to look at. And again, this is Amazon overlaid. It doesn't mean that that's what Bitcoin is doing. I mean, it's crazy how they've been doing it now for quite a while, right? For this, I don't know where this ends actually, so I can't. This is since January of 2023. Since January of 2023, these two have been really close in similarity. And could you imagine a break outside of the sustainable channel and then the mean reversion, but like because of adoption, it just continue. I can imagine it all. And I'm not trying to suggest that Bitcoin is going to follow the fractal of Amazon, but I am suggesting that it's going to follow the fractal of Amazon if debasement continues and adoption continues, and both those things seem to be very strongly favoring continuing, is that Bitcoin is actually going to walk up to the top portion of its deviations, which that's what I expect. That's different than what. Hold on. Hold on. One more. One more. There we go. That's different than what this suggests. This suggests that log scale regression continues to suggest diminishing returns. This rolls over. And that's not what the fractal of Amazon suggests. That suggests that we walk up higher. And that's when diminishing returns is going to be disproven. 80% drawdown from 150K. Let's put it in the lines over here. Let's say that we get up to 150K. And then we have 80% drawdown. We take it. Yes. So that would put us outside of what I believe we like that brings us outside the orange, right? There are a lot of people who believe that this could happen, and I don't rule it out in so much as that if bad times were to come upon us, right? If all of a sudden recession hits, people lose their jobs, housing market implodes, deflationary bust happening, Great Depression on its way, yes, then that could happen. And that's why these lines are introduced over here for like what is my like worst case expectations of what could happen here, because I don't know that these are right. I don't know that this green line won't break. It just hasn't in a long time. I don't know that this orange line won't break. It didn't during the COVID explosion, and it didn't during the FTX blow up, the last two bear markets. So I don't think that it's going to break, but it could. And if it does, then you're right. But that case, Robert, of Bitcoin correcting 80% with the rate of adoption accelerating here into early majority, yes, maybe Bitcoin treasury companies blow up spectacularly for real, and it causes like it could happen. I just attribute it to have a lower probability. That's all. I just have a very that could happen. It's very important to look at and for us to be aware of, which is why I also use that guide. Like if people were borrowing against Bitcoin, like that. But I think it's a very low probability. You're right. It plays such an important role in this conversation today, which I think is an excellent conversation. I don't see these conversations being had elsewhere, but then again, I only focus on what we do. Um, you know, yes, yes, right here. That would be so cool. And if anyone hasn't seen it, I mean, and the Microsoft I'm thinking here, right? And they take place at different times. Anyway, um, the point of the Amazon fractal, the adoption of technology fractal, is to make the point that why most people believe that what we're going to experience is going to be, log scale regression and this flattening out, that I'm saying no, like early majority, we're going to be disproving diminishing returns, and then showing you or giving you some type of data to back that up. That's all. And I think it's presented very well today. It's an ongoing art. It's an ongoing conversation that has gotten us here today. I think that last Thursday was a major breakthrough in this conversation that gets us to looking at it like this, right? And instead of, you know, in the beginning where we just had this, now you know why. Now we have this, and that's and yes, there's different aspects to it, including the lower bands over here and whatnot. But everyone, I love today's session. Thanks for being here. Share it with a friend. Give them a different perspective on Bitcoin that's just simply not out there, because I think it's the correct one. And I don't know what to call this green line over here. It's kind of like the FOMO line. And it's not to say it can't and won't break. It just hasn't in the last 13 years, 12 years. It hasn't broken. And the orange line, which I thought was correct, and it could be, that has made it through the COVID crash, as well as the bear market of 2022, Fed tightening, liquidity being drawn away, and FTX spectacular blowout. That could also break, and we could see an 80% drawdown to levels that would be very welcome by a lot of people for the opportunity to continue. But I think something unusual would need to happen in order for that to happen. The macro could change rapidly, but something incredibly unusual would need to happen. There are people who think that we're about to have a Great Depression, deflationary bust. If that's happening, yes, then that's likely in the. But what are the odds of that happening? That's the question. Does the everything bubble continue? Is Nvidia too big to fail at this point? Is it does the government need those tax receipts, or is everything about to implode? Those are the questions that need to be asked, and I think we've given ourselves a pretty good scale of probability across the board. CTM strong. Big shout out, replay crew, silent majority, everyone. God bless. That would do it. That would do. God bless you all. I'll see you all tomorrow.